Well, we're joined now by Javier Perez-Tasso, Swiss Chief Executive for the Americas and UK region, and also the host executive for Sibos Toronto in Canada.
And he's going to be telling us how the financial industry is innovating to create the robust interbank payment infrastructure of the future. Welcome to SibosTV, Javier.
Welcome,
Great
Javier.
to have you back.
Yes.
Thank you.
Well, we heard yesterday at the opening plenary that technology, change and innovation high on the agenda. Does that resonate with what you're seeing across the financial centers that you manage?
Yes, definitely. I mean, we see it happening across the major financial centers. And actually, well, we all know the context, right? We've heard talk about the fourth industrial revolution, which is essentially an industrial interplay of technology, not just mobile and cloud, but also big data, sensors, robotics, DLT, AI, machine learning, just to name a few. And the thing is that it is really having now a major impact on the financial industry. And particularly because businesses expect from financial services the same kind of experience, choice, and service integration that they get in their daily lives from the so-called GAFA, the Google, Amazon, Facebook, and Apple. Well, one of the good things is that the industry is responding. Innovation is happening now. And yesterday, actually, in the opening plenary, well, it really came across with that evolution that the transaction banking model is having because of a series of new entrants, fintechs, niche players that are essentially kind of salami slicing the payments value chain and increasingly, by the way, powered by pro-competition regulations like PSD2 in Europe and leveraging new technologies like APIs on the back of open banking. And all of that is, yes, creating increased competition, but also a whole set of new partners that we're seeing here with increased collaboration between banks and fintechs.
So what do you think are the critical ingredients for success?
Ingredients for success. Well, I mean, if you think about it, this front-end innovation that we're seeing now is very visible. We see it on the press on a regular basis. But it relies on an area that is much less visible, but I can tell you, as critical, and where there is a huge amount of innovation going on as well. Obviously, I'm talking about the underlying interbank financial infrastructure that needs to be resilient, scalable, and secure, and because it is essentially the foundation of all of this front-end innovation. And talking about ingredients for success, for this underlying infrastructure, I would say I see essentially three. I mean, obviously it needs to be innovative and allow for technologies to meet these new customer needs. It does obviously need to help the industry in meeting the very important regulatory requirements around financial crime compliance. And it does need to stay secure and resilient in meeting the cyber challenge. And when it comes, when we talk about renewing infrastructure, you all know, I mean, for any infrastructure, there are always two schools of thought. Either you start from scratch with essentially blank sheet of paper, or you evolve what you already have building on existing foundations. And that's exactly where the industry is at the moment.
And you've mentioned two approaches there, either starting from scratch or not. Yeah. So what are the advantages of each of those approaches?
Well, let's start with the starting from scratch. The advantages of those that start from scratch are obvious. I mean, they are unencumbered by legacy systems, and therefore they can deploy the latest technologies really fast. But what we're seeing so far this week is that you can really innovate leveraging existing infrastructure because there are tangible assets that the industry has already in place today. Assets such as strong governance, operational track record, resilience, security, and global reach. I mean, global reach, arguably I would say, the most critical success factor when it comes to any innovation, and payments infrastructure is not an exception. So that's why personally, I wouldn't throw out the baby with the bathwater necessarily here.
Mm-hmm. And in terms of the infrastructure you're talking about, are you seeing concrete examples of how it's developing?
Well, I can tell you a couple from the SWIFT perspective. One on cross-border payments. We are upgrading the existing correspondent banking rails to achieve same-day funds and end-to-end traceability and transparency of fees. Mainly keeping, and that's important, keeping banks front and center, allowing them to dramatically improve the cross-border end-to-end experience, payment experience to their corporate customers by exposing this data through APIs. So that's clearly one of the many initiatives. That's called Swift GPI, and I think you've heard about it so far this week. It's gaining very strong momentum. We have in excess of 2 million payments sent on GPI since its go-live date earlier in the year. When we talk about speed, it's essentially much faster than 1 day in practice. Of course, the Swift bit is just a few seconds, but even end-to-end, we see a significant number of payments being credited to beneficiary parties in a matter of minutes. And while this service builds on existing rails, it doesn't mean that the service is static, as proven by the recent proof of concept that we launched on DLT for North-South account reconciliation to optimize liquidity. So that's one example. If you want another one, that's cross-border. Domestic. In domestic, we're supporting instant payment initiatives around the world by both reusing our interface technologies, but by also coming up with 24/7 low latency, high throughput network solutions that can be reused. But at the end of the day, I think what is important, and because one of the ultimate aims is to have this end-to-end visibility of the payment and end-to-end transparency, basically an end-to-end connectivity of these domestic payment systems, as many of those, if not most of those, are moving to ISO 20022 standards. The beauty of Swift GPI is that it can make the domestic payment systems interoperable.
Now, last year when you were on the show, you talked about cybersecurity, and you can't fail to notice it's still incredibly important this year for the Swift community in Canada and beyond. I mean, what's your reading of it?
Well, you said it. I mean, it's as important, if not more. It remains very critical. Let's put it that way. I mean, if you think about it, with all of this, while all of this innovation is going on, cybersecurity is keeping the industry's feet firmly on the ground. Because as banks keep rolling out new digital services, there is a growing number of entry points for cyber criminals to access systems and customer data. And yesterday at the opening, the cyber, a big issue debate, it came across that one of the approaches to fight against that is to have a cyber mindset from the outset when coming up with new products. Essentially, to design in cybersecurity when we are innovating. So we live in a world where I think the digital age is probably more than ever the age of risk management. And if I can make an analogy actually with a team sport, well, you know, I mean, you need to be very strong in the attack if you really want to win the game. You need to have essentially creative scorers that exploit opportunities. But you also, if you really want to win, you need to be incredibly strong in defense. And that's essentially the point here. Is yes, very important to have a commercial attack, but as important, or if not more, to have a strong defense. Yeah. And that's the balance where the industry is getting at.
Just checking, it's the most important game in the world, football you're talking about, or do you call it soccer?
Why don't we talk about hockey here? We're in Canada, right?
We're in Canada, and in any game you need the attack and defense, both, right?
No, but maybe coming back to cyber, because we've been discussing before that, that over the past 12 months, and talking about 12 months, look at what has happened. It's not only the financial industry. It's, we've seen attacks across many sectors, like WannaCry, very good example. We've heard this week numbers that are pretty telling about the sophistication of the attacks. 6,500 new vulnerabilities, in excess of 120 million new pieces of malware. And getting hit is an expensive business. We know that. I mean, it's, the average cost of a cyber attack is in the range of 2 million. So
defense is as important as ever. Javier, thanks so much for coming.